Well, welcome if you're watching us asynchronously and you're on my YouTube channel there, watching us live here in class, and also some students online synchronously. So I'm glad that we have that differentiality in modes of offering this class nowadays. That way we can hopefully take care of everyone. So we're getting started late tonight because we had a meet and greet for accounting employers and students over at the Polk Art Museum. And it ended at, well, actually a little after 6. So it's supposed to end right at 6, but we know how things are. So we are getting started somewhat late here. I hope that you got my note about starting late. Always a good question with the email system to truly come through. But I'd said 6:15 there, a little bit late from that. But all good events tend to go over time. So what we'll do tonight, I'll include everybody here. We're going to go ahead and get into chapter 8, which is about a few things, including, very importantly, materiality. So we'll see some guidelines for materiality. We will also discuss how do we have an exam next week. Yes. I'm a mind reader. Yeah, parents will tell their children they're not mind readers. Professors tell their students that they are. Yeah. So we'll have it next week. Yeah, but here's how we'll do it. We'll have it online. So it will be through chapter 7. So chapters 1, 2, 3, skip 4 and 5, they're background chapters, then 6 and 7. So we'll have 5 chapters on there. Again, 1, 2, 3, 6, 7. I will open that on Sunday, and I will send you a reminder. I'll let you know how long it is and all that good stuff. Haven't quite put the finishing touches on it yet. That's okay. I will have 2 things. From my accounting lab, I will have about 50 multiple choice questions, 40, 50, right in through there. Now, technically, they are open book, open notes. I don't care. That's fine. I actually find students learn more that way. It doesn't mean questions are easier at all. But by having to dig for information sometimes, students really learn it. So I decided during the pandemic that is actually a good thing. An exam is not only supposed to be evaluative, but also really should be something that you learn from too. So I have 40, 50 right through there, multiple choice questions again. And they are pooled questions, which means that my accounting lab selects those from a large pool of questions, which I have decided upon, and every student gets a unique exam. So that'll be one segment of the exam, one part. The other part will be essay. Again, open notes, open book, that's fine. So something that you'll type out and post on Canvas. So you'll find that our Canvas assignments were to do that. So again, I will be sending you an email with all these reminders. Now I realize I will be getting in chapter 8 tonight. That's okay. It's on this exam, but it will be on the second exam. And that will come around all too soon. In fact, the end of the semester will come around all too soon when you think about it. Yeah. Yeah, it's just been over 2.5 months now. And we're thinking about 1 week tonight, 1 week, pardon me, from yesterday. Well, we don't have class then, so you can celebrate what? Pardon? It's not Passover yet. No. No, good guess. Hint, it's not, well, I say it's not a religious holiday. However, most holidays do have religious roots. They really do. And this one actually does. So what is it? Ooh. How many of you have a significant other? It will be a really interesting time to be a fly on the wall if you don't deliver on this holiday. Pardon? Yes, thank you. Valentine's Day. Ooh. Yeah, I could have been very passive aggressive and not remind you of that. Think about that. Uh-huh. And then let you just forget about. Ooh. Well, you don't want to do that. So I was kinder than I could have been. Although I often suggest to my students this. Later on, when you have children, they're growing up, tell them the holiday is actually a day or two after the official holiday. For example, if you went out and bought Valentine's candy, etc., the next day, what will you get? Yeah, you bet. Usually at least half off. Yeah. So then you could save all kinds of money, and that would be a very good lesson from accounting to learn. Think about it. Yeah. So no, kids, they have it wrong. It's not February 14th. If I want to give myself a little bit of extra time, I might even say it's not even February 15th this year. It's February 16th. By the way, I would not say February. It's not spelled like that. No. No, it is not. Started to spell it correctly. No, I don't want to do that. Here's my eraser. I forgot to do my transposition error. Actually, I forgot to simply. Okay. Okay. So make sure you pronounce it correctly. Okay. Oh, I know one of my very peeves. Oh, I think I already told it to you though. Did I mention this one? I know I did to at least one of my classes this semester. Did I mention that one? Very good. Oh, good. Everybody got the lesson. All right. Now I need to go back and ask my other class if I did in there too. Yeah, as a professor, you have to keep track of what you told which class. And I'm sure I've told it in duplicate sometimes, but maybe my students didn't even remember. So maybe I saved face that way. Yeah, Easter. Well, in Canada, they do have Easter Monday, but I don't think it's the day after our Easter. Maybe it is. I don't know. But I said Valentine's, kind of a religious root to it. Saint Valentine, Easter, obviously religious. And Easter, is, of course, based on the Jewish holiday of Passover, but a lot of religions have some celebration as spring is coming around. So celebrating the change in seasons. So I guess if we're really skeptical, we can say that they all trace back to our pagan ancestors. Now, just like Druids with their so-called famous worshiping of trees, and supposedly that's where Christmas trees come from. I don't know how many people really think that. It's one of those stories. Maybe there's some truth to it. Maybe not. Who knows? What Christmas tree sellers are always thankful. Now, we've also got some homework. We have not gone over homework from chapter, let me think here, 6 or 7. So that in addition, talking about chapter 8. Let me get a general feel for going over homework. I can always do that in a more than one way. Now, for how sufficient, let me ask, is my accounting lab for feedback on homework? How sufficient is that? Just regular helps, okay. So, for some things my accounting lab does, okay, that's good. For some things I definitely need to go over them with you. How sufficient is having a recording which you can access online? Sometimes for homework, not every time, but sometimes for homework. How great would having a recorded session be? I mean, it wouldn't be all that long, but how would that be? Right. Or the best thing is having it live, right?
I like having it live, but I like to be able to like reference back, you know?
Okay.
And you mentioned something earlier. I didn't catch part of it. My phone was being weird. So you said something about in Canvas there was going to be a written assignment. I missed that part.
Oh, sure. That will be for the first exam. So in addition to multiple choice on my accounting lab, you'll do a written part, I say written essay part on there. So answering some essay questions. There, those both make up exam 1. And so, yeah, just those 2 different modalities.
Okay, thank you, Professor.
You bet, Amanda. So I guess general consensus is that doing homework live is the best. I may not be able to get everything done live is my only problem. Okay. So if I get stressed for time in class, well, then I may push them over to online, but I'll try not to. I definitely have makeup time toward the end of class. I always build that into every syllabus. I've learned since multiple hurricanes and since the pandemic to do just that. So yeah, I tend to get behind in the first part of class. I know that going in, but I'll make things up later on. Not a problem. As a professor, it's always good to have some material toward the end that is nice to cover if you can. But if you can't, that's okay too. It'll be fun. You'll have more than sufficient material for the CPA exam. Of course, if I give you much more than sufficient material for the CPA exam, is that a very good situation? No, information overload. So I have to give you enough. I can't give you too much, so I've got to hit that nice balance there, whatever that sweet spot might be. All right. Oh, by the way, what I will do, I will open up the exam on Sunday, uh, this coming week, and close the following Sunday. So you'll have plenty of time to do it. You'll have one shot to do it in. And again, I will include all that in the email, which I will send you. Okay. Any questions? All right. Just get just here. Bless you. You bet. All right. So just kind of eyeballing things here in chapter 8. We'll be fine. Okay. Okay, so what I will do, I'll start going through chapter 8. I don't think I'll get quite all the way through because I want to save some time afterward. Of course, do some homework. So I'd like to get 6 and 7 homework in. I think I'll be able to. But I'll budget my time accordingly. So I'd like to get chapter 8 done first while we're fresh, bless you. And even though it isn't on this exam, again, it will be on the next exam. So it's a good idea to make sure we keep going over material. So here in chapter 8, well, actually 3 different topics. They're related, of course, but we're going to be talking about planning the audit. So yeah, we'll see audit planning starting from acceptance of the client all the way through issuing an audit report. We've got to plan for everything. We've got to budget our time. We've got to budget how much the cost of this audit is projected to be. And after all, primary cost will be for what we could say is direct labor, our professional's time. Well, we'll be budgeting, we'll be assigning personnel, making sure that we have the right mix of experience there, making sure, hopefully, that we have people who are experienced in the field of a client. And then we'll reflect back on analytical procedures, which we discussed a little bit last week. And with analytical procedures, we made sure that we conduct most of them pretty early in the audit where we can see where problem spots might lie or might not lie, as the case may be. So if analytical procedures early in the audit turn up with good results, that's great. Probably the financial statements will be fairly stated in accordance with GAAP, or at least there is a greater probability that they would be. Bless you. Now, if on the other hand, analytical procedures turn out bad early in the audit, that means, probably this client has problems. They may have some misstated balances in their financial statements. That means more work. We'd love to know that early on. So we'll go over analytical procedures to a greater extent than we have before. And we will also be talking about materiality. So how much is material? How much makes a difference? And that can be a pretty large amount, at least for individuals. So we'll see some decision rules to help guide us along the way for materiality. Now, as we think about audit planning, let's talk about that here at the get-go. So Roman numeral 1, we've got some planning phases here. So looking at some planning phases that we have in the audit, well, first of all, is what we call pre-planning. So long before we even sit the audit team down, there's some things we need to do. And the most obvious thing we need to do at that time is, are we going to accept this client? So new client acceptance / current client continuation. Sometimes people are surprised to think about current client continuation, but there are a lot of situations where we may not wish to continue a current client. We may wish to fire that client. And of course, then it may well be because clients give us problems. And that's fair. So if they were not timely in getting us records, that's a major thing. The auditor was sitting around. If we had disagreements with the client, if the client's management is obviously shady, they got a new management team in there and we don't like the looks of those people, we may wish to think about discontinuing the client. Or it could be that the client has gotten too far out of our industry specials, or vice versa. Or it could even be that it's a smaller client. Our firm is growing. So as we do, we hope that we see what? Bigger clients too. That happens a lot in CPA firms. It may be sad to get rid of a client they've had for a long time, and I guess we could just say, oh, that's business. So let me make sure I'm sharing my screen if you're online. Or again, let me ask this, if you're online, is it better if I share my screen for most everything, or is it better if I appear live? Little poll. How many say to share the screen for most everything, including the chapter outline? Anybody? Any opinions?
I don't mind either way. Whatever you want to do.
Okay, thanks, Amanda. Anybody else? Okay. Why don't I go ahead and stay live for now? I will be writing some things on the board, so it's probably easier to be live than to have to switch back and forth a few times here in this first section. And I may venture out of screen sometimes. I walk around the classroom, but you'll still hear me okay. If not, again, just let me know. Okay, thanks. Yeah, let's see. In this room, we do have this handy dandy camera. Oops, cord's not very long. So if you're online, we do have this handy dandy camera. Oops. I'm sorry, the cord is hung up here. Or is it just plain old too short? I don't know. But this handy dandy camera, which they bought when we came back live from the pandemic, but they really don't work very well. They're supposed to automatically swivel, etc. Well, would anybody like to figure out how to use this? And seamlessly for each class? You can help me if you can. How many professors have you seen who actually use those cameras, by the way? Anybody? Very few, yeah. So, they're not what they were cracked up to be, like a lot of other things in life. So let me go ahead and leave myself live here, and I'll go back on sharing my screen as I need to. All right. All right. Now, let's talk a little bit further. First of all, about new clients. Well, if this new client, that's obviously the career decision that we have to make. And we have to be really careful. First person who knows a lot about this client is the predecessor auditor. the previous one. So let's inquire of the predecessor. First of all, why is this client leaving? So the reason for auditor change. We don't want to ask the predecessor, is this client a scumbag? But instead, we'll put it more delicately than that. We do have to ask about the client's reputation. So something about that too. So again, if this is a new client, the auditor must contact the predecessor auditor, who, by the way, must respond fully. That's required under SASs. Otherwise, they didn't do their jobs. That's failure to exercise due professional care. Now, if they have to have money to do this, that's not too often, to tell you the truth, who's going to pay? The client. But usually they don't. And I'll tell you, by the time that they switch auditor, there's a valid reason why. Again, audit firms growing or no longer in that area of specialization, or maybe there was maybe not a major disagreement with the client, but over the years, just the client's quirks and the auditor's quirks add up. And it just wasn't working too well anymore, like a lot of marriages. And think about it, it is a relationship. But if all matches well, the chemistry is just right, then we'll have something successful, such as KPMG, having been the auditor of public since 1961. You think KPMG ever wants to give that up? No. Now, of course, client has to give permission for the information to be exchanged, and the successor auditor normally obtains this and then will contact the predecessor. The predecessor does not have to compromise existing litigation, though, although the successor probably won't accept this client. So if that successor says, we cannot comment on this client because of litigation relating to this client in which we are currently involved. I don't want to say currently in court, but well, you get the idea. If they give us a response like that, what do you think we as a successor or potential successor will do? What we say? Well, is a term which we normally learn in a variety of languages. Japanese, what do you think it may be? If this term is in Japanese, and that's sometimes used. Okay. Hawaiian. Okay. American. Goodbye. Yeah, short, sweet, and simple. Is we minimize risk. We don't wish to be there. So here in the US, sometimes we hear the Japanese version, sayonara. I forget what it is in Chinese. Obviously, in Hawaii, we will hear a beeping sound. I don't know what that beeping sound is. You probably can't hear it online. But Hawaiian, nobody's been to Hawaii. Aloha. Yeah. German, Auf Wiedersehen. Yeah, all those things. Multiple ways to say it in Spanish. And of course, in Hebrew, shalom. So whatever we may say, we're out there. Okay, if you figure out where that beeping is coming from, please let me know. Is it out in the hall? Oh, it was, and it just shut off. What was the projector doing? The voice is coming from there. The noise, oh, I'm sorry. Okay. True. Yeah, so well, the noise came from there. It must have been, oh, heaven knows what. So as long as it doesn't give out on us tonight, we'll be okay. So yeah, a client where the predecessor was not too happy, especially as predecessor contest legal counsel, well, we run. Now, I've always wondered what happens to clients like that, but I'll say this. Yes, sometimes they may go for another auditor, finally get one to accept them. If they've been with a national firm, they're going to get less than a national firm in most cases. And for a lot of clients, it's actually going to be a moot point because they will either have to convert to something lesser than an audit, like a review that doesn't have as high a level professional skepticism, or some of those clients, they have other problems. They go out of business. So again, can be a moot point. Now, bring on the successor auditor is very concerned about evaluating management's integrity. So ask the predecessor about this as well as the reason for auditor change and any problems predecessors encountered. Very relevant information. Now, the auditor must make inquiries about the predecessor's findings of fraud, illegal acts, material internal control deficiencies. We'll see those a couple of chapters down the road, but something we need to know about, something wrong with internal control. For obvious reasons there. Now, the auditor can even ask the predecessor for copies of certain working papers, including those related to planning, internal control, audit results, and other matters of continuing significance. And the latter also includes, excuse me, evidence about the beginning of the year balances of the real accounts. Very relevant for us because we take over there, and those beginning balances of real accounts were audited when? End of last year. Who audited them? Predecessor. They rolled on over. So we're really concerned there. Now, the auditor should also evaluate, of course, whether they have the necessary expertise for the client and whether the client can introduce risk factors such as a client who is likely to go bankrupt. That can be a valid reason for not accepting them. And also remember that the auditor will encounter more business risk if the financial statements are more widely distributed. So more evidence will have to be gathered here. So a publicly traded company, their financial statements are always publicly distributed. Form 10K, find it on the Edgar database. So if so, well, simply put, there are more potential plaintiffs. There are other hands involved too, such as the SEC. So that increases the auditor's business risk. Yes, we will play it safer for a variety of reasons. We'll gather more evidence in that case. Really document what we're doing. Well, the auditor may also contact other parties, such as the client's bank and creditors, because, well, they're very relevant parties too. And of course, a CPA firm may wish to reject risky clients. Also have a little note there that exchanging this information actually increases auditor independence. Reason is that nothing is swept under the rug by changing auditors. You know, sometimes it may seem as though, oh, you have a problem with this auditor because this auditor found out something that you should have been doing. Well, a client may wish that they could bury that, but they can't. So may as well stick with the old auditor with the predecessor, because it turns out the successor auditor is going to discover it. The predecessor will tell them. And B, just a little note, if instead this is a continuing client, the auditor should still evaluate that client each year for continuance, just like we discussed the get-go. Now, number 2, something else to do. Identify the client's reason for the audit. Usually just done through inquiry management, and it's easy. If they are publicly traded, well, then it's obvious. If they are publicly traded, they must have the audit, the SEC says. If they are not publicly traded, a third party is involved in almost every case. I say that because a client does not have an audit unless they have to. Think about it. It's expensive, it's stressful, it's time consuming, etc. So there's a third party involved. A creditor is a very common reason. Including that. Get an audit, we'll give you a lower interest rate on your loan. They may be regulated. So again, like someone in construction. Or they may be receiving governmental funding, like we do through Federal Department of Education. And we also get state funding through Bright Future scholarships. See, if Florida employs pretty much the same audit the same audit requirements that the federal government does. So most states have very, very parallel audit requirements to federal governments. And well, that just keeps things a little bit easier. Although meeting federal compliance requirements and state compliance requirements, not easy. So just as the representative from the city of Lakeland was telling me tonight, she said that during hurricane cleanup, they received FEMA funds. She said that every time a crew cut up a branch, they had to record the length of that branch and they had to record the diameter, or I should say circumference of, well, either diameter or circumference, I should say, of the branch. So FEMA wanted to know what the dimensions are, and then FEMA wanted to know how that branch was disposed of. So if you have an emergency crew out there cutting a whole bunch of branches, you better hope they write things down quickly. Or alternatively, have really good documentation software and equipment out there so they can do this very fast. Because after all, say he's trying to rebuild. Oh my goodness, if you don't do that, FEMA won't be pleased. Well, then number 3. We should also assign audit staff the audit team. Mentioned that a bit earlier, but the team should have proper proficiency. So right mix of juniors and seniors. Some people really, really, really know what they're doing, but then we can have some even accounting interns and they probably feel like they don't know what they're doing most of the time. Although with a little bit of experience, they will. But when you first get out there and all this hits you in the face and it looks really different from an accounting book, yeah, it's a reality shock. Well, number 4, we should also budget the engagement. That includes measuring various costs. And the most important cost is usually for the auditor's labor. And that involves, of course, estimating the hours that each auditor will spend on the engagement and then multiply by his or her billable rate. And of course, the billable rate is much higher than what that person earns. In fact, a pretty good rule of thumb in the industry, the percentage of one's billable or chargeable rate the one normally earns as an auditor is usually around which percentage do you think? Any ideas?
3%?
How much?
3?
Higher.
Oh.
Sound like an auctioneer. It's about 25%. Sometimes a little bit lower, maybe a little bit higher sometimes, but it is a reality shock if you see your billable rate and compare your paycheck to it, especially after deductions are withheld. Well, then number 5, we'll also obtain an engagement letter from the client, and we do that to ensure that everyone has a clear understanding of the engagement. I'll show you one in the book in a moment. Also, all lenders also have a preliminary meeting with the client at this point to discuss major issues so that everybody's informed, such as what are some major audit issues the audit team might encounter. And the client can give us really good feedback for that because they're probably struggling with those issues right now. So just as the representative from the city of Lakeland said, with GASB pronouncements, since she's been working for the city of Lakeland for almost 25 years now, they've had about 60 extra GASB pronouncements. And I said, well, in auditing, we've had even more. By the way, a little bit of trivia. Some of you know this. GASB stands for what? I have that back on camera. GASB stands for what? No ideas? Okay. Governmental Accounting Standards Board. FASB with the G. And actually in government, you have to worry about FASB too. So you've got 2 sets of authoritative guidance there. So needless to say, accountants in government, they tend to have nice, stable jobs. They really do. You and I were talking about that tonight. She and I were also talking about marketing. Would anybody like to be a marketing student right now? Why do I say that? What's going on with a lot of marketing professionals? You right about them? How good's their job market right now? Not. A lot of companies are shedding a lot of their marketing staff. It's not only majoring in marketing, but also related fields like communications, public relations, etc. We don't have a PR major here. Also, people who major in journalism often go into marketing. So I don't know the breakdown of the 7,000 jobs that Disney is planning to cut. Has everybody seen that? Oh, it's a huge number that Disney's cutting. So again, I don't know what the breakdown is. You can bet that there are a lot of marketing people in there. How many accounts do you think are in there? Again, I don't know for sure. We're speculating. Probably very, very, very few. Yeah. No, instead, companies need accountants, begging for talent out there. But I'm glad that you all aren't majoring in marketing. Nobody's double majoring, right? Okay. So, I actually have an undergraduate student who is double majoring. She's on this class. That's different. I don't think I've ever had anybody double major before, because usually accountants and marketing people, they think very, very differently. So yeah, accounting is one of the most endurable fields out there. In times of economic trouble, accountants usually survive quite well. And if for some reason Disney sheds a few, well, those laid off accountants, how quickly do you think they'll get another job? Oh, really quickly. You can bet that there are businesses who need accountants who are looking to see who's being laid off there. Oh, yes. As far as companies needing marketers and otherwise trying to find out the number of marketing professionals who are being laid off, yeah, I don't think they're bothering. It's because people in the marketing field are very plentiful right now. It's all supply and demand. And by the way, just reading that last little sentence there, before we go with the book, we can note the client for an SEC company is actually the audit committee because they're the only ones who can hire and fire the external auditor under the Sarbanes-Oxley Act. Definitely not anyone who is employed by the company like the CEO. CEO says, I don't like it that you're reporting that fraud I've committed, so you're out of here. And no, don't do that. Or in the famous words of Donald Trump in a show before he was president, you're fired. That's right. Okay, let me go to page 225 here in the book. Please don't tell any of the marketing professors what I said. Now they're already aware of the condition of their job market, I'm afraid. Yeah, it feels good to be an accounting professor and know that you're sending your students out in a field where they can be extremely secure the rest of their careers. But a lot of other fields, professors can't have that really nice, warm feeling. You better not be recording me on that. Or if you are, that's okay. Please, I'm recording myself while am I saying. But we've learned to be discreet by this stage of our lives, right? Least fewer problems. Okay. You know, if you tell people, ooh, your field's not doing very well, but mine is. It's another reason for people not to like accountants. Hey, yeah, those arrogant people, just because they have jobs and we're waiting here in the unemployment line. Ooh, that was catty. Sorry. Everybody is very impressed with my insincerity. Okay. Okay, signing into the book here. And for those of you online, let me share my screen. Okay, as I share, hopefully, the book here. Like I've told you before, it does be absolutely no good to try and sign in before class because in about 5 minutes, it kicks me out. Unless I go back to the book screen all the time and click something, but please, that's more of a distraction. Okay. Set professional audio and audio settings. All right. Oh. Okay. Why is my book downloading? There. Okay, just had to refresh that. So here's an engagement letter in figure 8.2. So there on page 225, as I said, it's for not the Hillsburg Hardware Company, but Hillier and Riddle CPAs. So in Macon, Georgia, everybody know where Macon is? Probably because you drove through there on I-75. Yeah, it's the main reason for people to know Macon. So here we have a typical engagement letter, and it's from the auditor, of course, the client. Now, there is no standard language for an engagement letter, but there are really, really good items to include. So good rules of thumb, industry best practices, and incorporated into templates for auditing software. So in that template, you would go in, here's a model engagement letter, and you tailor make that to your individual client. So it really speeds up the process a lot. So here, this one is definitely from engagement software, audit engagement software. I can tell it's from PPS, in fact. Common audit software, especially for smaller firms. So let's see, this is written to the president. And it says, you've requested, oh, that's good. You've requested, we did not. That's actually very good from a legal standpoint. So I see a best practice there. That we audit the statements of Babb Clothing Company, which comprise balance sheet as of December 31st and related statements of income, changes in stockholders' equity, and cash flows for the year that ended, and the related notes of financial statements. Sounds a lot like what comes from the audit report, and it is. Well, we're pleased to confirm our acceptance and our understanding the audit engagement by means of this letter. Our audit will be conducted with the objective of our expressing an opinion on the financial statements. That's good. They got all that right. We'll see more details, but it's a lot better to get an engagement letter. In fact, it's required in the audit. For many other engagements, a similar letter, an engagement letter, is required, or sometimes it's only a suggestion. Well, if the auditing standards suggest it, what had you better do? Write it. Get it in writing. Better than a bunch of emails and trying to wade through those if you ever need documentation, like for court. Well, we're pleased to confirm our acceptance and our understanding of the audit engagement by means of this letter. Our audit will be conducted with the objective of expressing an opinion on the financial statements. Now, again, that last part there, that's our objective. So it's not to go out and correct them. It's not to tell you what to do as a company. And that's good because sometimes companies' accountants, quite frankly, feel a bit treaded on by auditors. Oh, they're trying to tell us what to do. Well, in a way that, yes, they are. Too bad. Then we will conduct our audit in accordance with auditing standards generally accepted in the United States of America. So GAAS. By saying that, of course, we know this is a privately held client. Otherwise, we would have said standards of the PCAOB. Well, those standards require that we plan and perform the audit to obtain reasonable assurance. There's that term, not absolute. About whether the financial statements are free from material misstatement. There's that term, material. So by saying reasonable assurance, by saying material misstatement, we're giving ourselves some wiggle room. We won't find everything. We won't correct everything, including immaterial things and material problems. Well, an audit involves performing procedures to obtain audit evidence about the amounts and disclosures in the financials. The procedure selected depend on the auditor's judgment. Oh, they always do, in fact, and that's common in CPA exam multiple choice questions. They'll ask something about the final decision of something in the audit, and the answer is always going to be it's the auditor's judgment. They may not even say decision. They may try to be a bit more sneaky than that. But always remember, in the end, everything is the auditor's professional judgment. And that is very often the correct multiple choice response I've said. But they know full well that a lot of candidates will not pick that. Because if candidates were tempted to pick that, they may talk themselves out of it. Because people think, oh my goodness, that's too obvious to be true. I've got to look for a more complicated answer. Well, by its simplicity, it was correct. And it fooled people. Ooh, that's a tempting one to repeat on the next version of the CPA exam too. And they do. So, procedure selected depend again on the auditor's judgment, including the assessment of the risks and material misstatement of the financial statements, whether due to fraud or error. And audit also includes evaluating the appropriateness of accounting policies used, like LIFO versus FIFO. Does the physical inventory flow correspond to the form of the accounting principle chosen? And the reasonableness of significant accounting estimates like years of useful life for depreciation made by management, as well as evaluating the overall presentation of the financial statements. Well, because the inherent limitations of audit, together with the inherent limitations of internal control, and we'll study more about them a couple of chapters down the road, an unavoidable risk that some material misstatements may be detected exists. I'm sorry. Let me start over. Because of inherent limitation of internal control and inherent risk that some material misstatements may not be detected exists. Oh, that's kind of a complicated way of saying it. If you're like me and you just didn't read not, bad. By the way, not reading not or a similar term, how big of a problem is that with multiple choice questions for some candidates? Very. So if you have a multiple choice question with not in it or a similar term, make sure you really start paying attention. I can tell you through years of teaching, the law people will forget about the not and give a response which is true. You're looking for the one which is not. Well, some material misstatements may not be detected. That risk exists, even though the audit is properly planned and performed in accordance with GAAS. So you know, in life, things just aren't perfect. That's what that's saying. So expect it. But we should really build that risk into this engagement letter. Otherwise, we've left ourselves open. We've tied ourselves down to precision. And again, life just isn't perfect. Now, in making our risk assessment, we consider internal control relevant to the entity's preparation and fair presentation of the financial statements in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the entity's internal control. That's different. The publicly traded client, because for a publicly traded client, we have a higher role in internal control. Specifically, we do audit, but not for a privately held one. So a little bit easier here, shall we say, in the way of engagement for the auditor. Reading on, however, we will communicate to you in writing any significant deficiencies or material weaknesses in internal control relevant to the audit of the financial statements that we've identified during the audit. So the definitions of those two categories we'll study more about as we study internal control, but suffice to say that something is significantly wrong with internal control. We must pass that along to the client, even to a privately held. So, after all, we should help them improve. But we will not pass along all the information that we would had we been engaged to actually audit internal control as well. Oops, hang on, my battery's running low. Oh. Okay, good. Now, this computer was supposed to have been replaced last summer. Let's hope they do this summer. But sometimes that battery fan is a little bit noisy. So if that gets to be too much on the line, let me know. Okay, so if you're online, how bad is that battery fan right now? I hear a little bit. It's okay.
I can't hear anything.
Pardon?
I can't hear anything.
Oh, great. Cannot.
No, I can hear you. I
Okay.
guess.
Oh,
I'm
you
sorry.
can't hear the fan. Okay, gotcha, Amanda. Thanks. Okay, I was saying right to go into despair there. Good. Okay. And please speak up if you're online there and you cannot hear something. Okay. That fan gets to be too much. All right. A little bit of rumbling. It usually stops first minute or two. A little bit of annoyance. Again, as we know from auditing, life isn't perfect. They tried to replace it. Believe me, it didn't work. So going a little bit further here, making our risk assessments, we consider internal control relevant to the entity's preparation and for fear presentation of the financial statements in order to design audit procedures that are appropriate in the circumstances, but not for the whoops, I went over that. Let me come down to the next paragraph. If you taught a course before, material starts running together there for you. Well, reading on, our audit will be conducted on the basis that management acknowledges and understands that they have responsibility for these things. So don't blame us as an auditor, in other words. So for the fair preparation, fair presentation of financial statements in accordance with accounting principles generally accepted in the U.S. B, for the design, implementation, and maintenance of internal control relevant to preparation and fair presentation of financial statements that are free of material misstatement, whether due to fraud or error, and then C, to provide us with first, access to all information of which management is aware that is relevant to the preparation and fair presentation of the financial statements, such as records, documents, and other matters. So management, open up, be transparent. If you're not, quite frankly, you may induce scope limitation and not get a clean opinion. Plus, everybody's going to think you've got something to hide. Not good. Then, second, additional information we may request from management for the purpose of the audit. And number 3, unrestricted access to persons within the entity from whom we determine it necessary to obtain audit evidence. So all employees, anyone, the board of directors for that matter, everybody we can go talk to. Oftentimes auditors will simply pick someone at random to talk to. Maybe they'll find a problem. And also, maybe somebody there is disgruntled and will tell us about a problem. It could be they just have an axe to grind. But on the other hand, that's how a lot of auditing problems are discovered. I forget where it is in the book, but there is a chart based on a survey of how audit problems were found. And that's a common one. Well, then, as part of our engagement for the year ending December 31st, we will also prepare the federal and state income tax returns for Babb Clothing Company. That's common. Our fees will be billed as work progresses and are based on the amount of time required at various levels of responsibility, plus actual out-of-pocket expenses. Invoices are payable upon presentation. So when we make up an invoice, please pay it, usually monthly. We'll notify you immediately of any circumstances we encounter that could significantly affect our initial estimate of total fees of $135,000. Then we see that we will issue a written report upon completion of the audit of Babb Clothing Company's financial statements. Our report will be addressed to the board of directors of Babb Clothing Company. Again, not to anyone otherwise employed by the company at all. Not the CEO, not the CFO, etc. We cannot provide assurance that an unmodified opinion will be expressed. So don't complain if you don't get that clean opinion you want. A circumstance may arise, which is necessary for us to modify our opinion, add an emphasis of matter or other matter paragraphs, or withdraw from the engagement. And then please sign and attach please sign and attach please sign and return the attached copy of the letter. That way, see they've signed it down here, and the auditor and the client have a contract. So very, very necessary to get the engagement letter. Again, there's no standard engagement letter, but this one really does illustrate the common principles in here. Any questions? It was a good review of some things in the audit and piecing them together. Yeah, it's good to see them, but even better to see them all together here in an engagement letter for us. Again, as well as for the client and anyone else who may be interested in that letter one day, including, of course, a court. And those of you online, you very well follow it. Okay. I forgot to share never mind. I did share my screen there. But again, good. Everything went okay. Just one check. Let me stop my share. Okay. All right. Well, as we come on down to Roman numeral 2 here. Not quite done yet in getting things set up. Well, we've got some additional information to obtain about the client at the beginning of field work. First of all, we need to obtain background information in order to understand the client's operations and its industry. We've got to understand how this client makes money. For example, the AICPA's industry audit guides, there are like 125 of them, can help with many industries. Auditors also keep up with major news items about clients during the year, such as by searching news databases, such as Wall Street Journal Online, really good place for a publicly traded client to find out information, or by means of file clippings. So clip relevant articles during the year. Of course, that name comes from when auditors had to flip paper out of magazines and newspapers like Wall Street Journal. Today, just do that electronically. But you want to know the major news items that affected clients during the year, because you'll want to make sure they're included in the financials. Well, then number 2, we'll tour the client's facilities. Good way to meet those that we'll be talking to and put their minds at ease. We're real people too. By the way, a lot of the client's employees tend to be afraid of auditors, so you may encounter that as well. You won't think yourself as an intimidating person, but just by means of being an auditor, you will be too. In fact, accountants can intimidate a lot of people. We don't know we do it most of the time, but yeah, we do. But at least we're respected. And also by touring the client's facilities, we get a really good overview of how they're going about making money. Number 3, we'll read the client's policies and procedures manual. will get some good feedback for internal control there. They have all the policies and procedures they need. Is any information missing? Does anything not look so good? Things like that. Then number 4, we'll identify related parties so the transactions can be identified during the audit. We went over this back in chapter 3. And the auditor is going to have to check out most related party transactions to a high risk. In fact, most every fraud is involved, and most will have to be disclosed in the financials. Well, related parties we've seen before include senior management, major stockholders, the board of directors, affiliated companies. So again, these are not arm's length transactions at normal fair market values. Or I should say they could be, but we can't depend upon them to be. They are very high risk of estate. So just as I mentioned before, very commonly in accounting frauds, senior management gets some goodie, which is fraud, such as an interest-free loan that does not have to be repaid. How nice. They just got extra compensation, tax-free, at least until the IRS comes in. So we're always very careful about related party transactions, including disclosure. Well, then number 5, we should understand the client's management and governance. Well, the auditor is concerned with assessing management's philosophy and operating style, the organizational structure, the activities of those charged with governance, such as the board of directors and the audit committee, its charter and bylaws, its code of ethics. All these can influence the risk of material misstatements in the financials. All the information there is being into a concept that we covered before, the toe at the top. So, is top management concerned about running a tight ship? The board of directors or for the others, case board of trustees make sure? We'd like to know. If we have a good warm feeling about the toe at the top, that's great. If not, this client probably has problems in their financials. Here at Florida Southern, as I've said before, our auditors love us. If I say so myself, they always comment on our toe at the top. Well, number 6, we should evaluate the need for outside specialists. And that's addressed further in a UC 620. Don't worry about that right now. But it is just like this. The representative from the city of Lakeland and I were talking about things such as the city's pension obligations. The city does its own pension plan, by the way. Some cities here in Florida subscribe to, I don't think anybody will know this term, FRS. You ever heard of that? Okay. You will in your career at some point. FRS is Florida Retirement System, and that's for state employees, although most employees can opt out of that and get into a defined contribution plan. But for pension obligations, the city must have actuarial information. I mean, after all, how long may these retired employees live? It's very, very relevant. There's no one on city staff who can do this, so they hire an outside specialist who will. Well, as long as the outside specialist is good, you're convinced of the reputation, etc., great, no problem. If not, you do. So, oil and gas. There's a number. How much oil and gas is underground? How much are the reserves? Nobody knows for sure. Certainly accountants don't, but a geologist can tell you. So as long as they are a reputable geologist, they know what they're doing, great. The auditor is all done with evidence gathering. In fact, in that case, outside specialists gave us the goods. Very, very reliable evidence. It's coming from an outside party too, not biased. By the way, reading on, this is important to note, the auditor will not refer to the specialist in his or her report unless modification of the report is necessary due to the specialist findings. So, oil and gas, this geologist We have no reason to doubt that, et cetera, et cetera. We would not say that in the audit report. Here's why. That would give any reader the impression that we're trying to give more comfort in the financial statements, give more assurance to those financial statements than an ordinary audit report should. That's well. However, if the specialist finds something wrong, such as the client's financials say there are more barrels of oil under this well, then the geologist says, so client says number of barrels up to here, geologist says down to here. We know why the client is trying to inflate that number, because that looks like a greater asset. Well, then the outside specialist gave us evidence to refute what the client is saying, and we will bring that out in the audit report there then as a qualification, or heaven forbid, as backing for an adverse opinion. Does that make sense? So if everything's good with the outside specialist, say nothing in the audit report. If something is wrong, the outside specialist finds the client did something wrong, usually by misstating something. The outside specialist will bring up this difference. If the auditor agrees, use it in the audit report to make that audit report other than clean. Now, the auditor will cite the outside specialist. By the way, number 7, the audit team should meet together to brainstorm about potential auditing problems which may be encountered, including the possibility of fraud and illegal acts. So just brainstorm. As we mentioned, it's also a good idea to have a preliminary conference, plus a checklist of working levers to prepare and other things that the client do to prepare for the audit. So here's what to do to get ready. It saves everybody a lot of time and effort. Questions so far? C, something else we do at this early juncture. Obtain background information on the client's legal obligations. Very important, as these must be properly disclosed, and the auditor will be concerned about many aspects of compliance. For example, if the client violates the debt covenant by allowing cash balances to drop too low, well, the bank may even be able to recall the loan. So if the bank says you must maintain a minimum of $10,000 on deposit with us at all times, if that balance drops $1 below 10,000, the bank can institute penalties, maybe increasing the interest rate, or in a worst case scenario, saying, okay, you gotta pay this loan back down. You're technically in default, and you don't want that. So, mentioned before, whenever debt covenants get tight, like that cash balance hovering right around 10,000, pay attention to that as an auditor is material, even if it's so small it otherwise would not be. So that's why I say also, auditors going to be concerned about materiality of even small misstatements when legal obligations are getting tight. Yeah, always remember, otherwise not material, now it is. So, some things the auditor should do now. Battery. Hang on. Plug that a bit. And it should go away. Here. Now, some other things the auditor should do. Read the client's corporate chart and its bylaws. This affects stockholders' equity. So, our value, class of stock, number of shares authorized, etc. We'll find them all there. Then we should also read minutes of board of directors stockholders meetings. Those contain information on unreported transactions, as well as disclosure information. They discuss the big things. In fact, one of the more problems is going to be going through 2 sets of minutes of board of director meetings. Minutes being a summary of what they discussed. But you'll find some big ticket items they talk about. The auditors are interested. Number 3, we'll read the client's major contracts, such as for debt purchases and warranties, and make sure the client meets all those. We'll inquire as to whether there are other legal obligations, and the client must say so in writing. Nothing else. And we'll see that in chapter 24. If there is something else, management knew about it, but did not inform the auditor, and now in writing, where management said nothing else, who's clearly responsible now? Management. Otherwise, people may think the auditor is. Again, we're not superhuman. Then number 4 also inquires whether there are other legal obligations. Oh, sorry. Covered that. And number 5, also consult with client's attorney, or for that matter, the auditor's own attorney is necessary. And in chapter 24, we'll see about inquiring with litigation with client's attorney, and they have to come clean with the student, as it turns out. Then D, not surprisingly, we mentioned this before, also do some preliminary analytical procedures to identify problem areas and to begin to evaluate the client's ability to continue as a going concern. And most financial ratios are performed at this point. So, if they look good, that's wonderful. Like there have not been too many changes in them from last year. Usually there are not many changes. If you see a sudden change, you find out what's wrong. If you can explain it, good. If you can't, problem. You dig in deep. And so we do most analytical procedures here in the start of the audit. We will do some extra ones at the end of the audit to see whether things are still on target, to see whether there are any financial problems developing with this client, because there certainly could be. Right? So what I think I will do is go ahead and stop chapter 8 there with coverage, and with the analytical procedures there, we'll be getting into those in our next class. So with the analytical procedures there, things are going to sound fairly familiar, although we'll add some material to it. Now, as far as this exam goes, okay, we know it's online. We know that means you could do it on your own. And again, technically, open book, open notes, although I find my students learn a whole lot that way. Let's not say things are easy. So you can take that. I'm going to go ahead and meet with you next week. We really need to do that in the interest of time, since we're kind of behind here. Let me ask you all this. Try to get feedback whenever I can. So in me next week, it's probably best to meet for the full time or close to it. I will tell you why. I know later on, toward the end of the semester, we'll even have some extra time by then. But, well, I just don't let on about that little secret when I write the syllabus. Because again, I want to front load things. It works out best. So, me next week will, well, okay, maybe not the full 3 hours or 2 hours and 45 minutes, but kind of close to it. How about that? And again, I will make it up to you later on. Yeah, especially because we have spring break coming up, and that's not long away. All right, so I'll make it easier in the long run for us. So, any questions there so far? Okay. Let me take just a minute here and run over to my office. I forgot to get my book before class as I was coming up from the parking lot there, just out of the meet and greet. And I'll go grab that and we'll go over homework together. All righty, we'll take a look at chapter 6 homework, starting on page 169. I'll go ahead and share my screen here. So, we were in luck. It didn't kick me off quite as quickly as it usually does. Good. Maybe they got too many complaints from professors. All right. Page 189 as usual, or 169. As usual, we had some review questions at the start. And I don't have any marked as ones I need to go over, but do you have any that you'd like to go over? You're okay. Okay. All right. Well, then, multiple choice, we had number 20. Whoops. Okay. Looks like it's toggling back and forth here. All right, page 170. Jeez. Okay. Okay, let me try this. Let me go back to like 150 here. See if that takes care of the problem. It does not. Okay. Let me go to home. And by reloading the book, I solved the problem. I don't think so. Okay, let me just sign out. Oh, hang on a second. Making progress, maybe. Oh, all right. Sign out. And let's just go to a new screen. Sometimes that's the best thing to do. All right, good. I don't know what made toggle from screen to screen, but maybe I found a new feature. I don't think I'll ever use it, but all right, here's the bottom page 170. Start off first multiple choice set number 620. So considering the reasons all others do odds, and as always, choose the best response. So which of the following best describes what the reason why an independent auditor reports on financial statements? Any idea? It's actually two. Different interests may exist between the company preparing the statements and the persons using the statements. Well, that sounds okay, like a good one. It sounds more complicated than the others. It is. It is more inclusive. It actually includes the other three. So as I've said, multiple choice in CPA exam, multiple choice questions before. If one response is more inclusive, always go for that. It's a little trick they pull once again. Because this difference in interests also influences, number one, misappropriation of assets may exist and it's most likely be detected by independent auditors. Well, or I should say at least the first clause. The statement of assets may exist could be detected by independent auditors. Okay. So I corrected that just a bit, but it looked tempting still. Number three is also included in answer number two. A misstatement of account balances may exist and is generally corrected as a result of the independent auditor's work. Shouldn't say the result, I guess, should really correct that just a bit, but still it's really tempting. Yes, as a result of the audit, most misstatements are corrected by clients, unless very immaterial, and a good client corrects those later and fixes the root cause. So number three, looks tempting. Number four, poorly designed internal controls may be in existence. That's very true. The auditor is very likely to find them. But that's only one thing the auditor does. It's not very inclusive. So again, go for number two, a lot more inclusive. Then B, because the risk of material misstatement and audit should be planned and performed with an attitude of, what did you say? Three. Very good. Thanks. Number three, professional skepticism. We're always professionally skeptical. I don't think I better press that arrow to the next page, by the way. I think that's how I got into my little glitch there. But yeah, we always, in this case, are professionally skeptical. We don't fully mistrust, but we don't fully trust either. So kind of trust but verify. Then, in looking at C, the major reason an independent auditor gathers audit evidence is to, one, for an opinion on the financials. And that includes most things, which are included by the other three answers. So again, go for the more inclusive. In this case, the big picture objective the auditor is trying to do in the end is to form an opinion about these financials. Are they fairly stated in accordance with GAAP in all material respects or not? Questions there on any of those? All right. Well, then number 21, dealing with errors and fraud. So first of all, an independent auditor has the responsibility to design the audit to provide reasonable assurance of detecting errors and fraud that might have material effect on the financial statements. And which the following: if material is a fraud as defined in the auditing standards, which one did you say? One. Very good. Yep, misappropriation, that first term gave it away. So someone stole an asset or groups of assets. Bad. The other three, if you look at them, are all innocent errors. Nobody meant to do them. Again, most things we find in the way of misstatements are totally innocent. Nobody meant to make it. But lo and behold, when you do find those relatively few intentional misstatements, namely fraud, it's bad. Bad to undergo. Then B, why assurance does the auditor provide the errors and fraud that are material to the financial statements will be detected? What would you say? 2. Always for an audit, reasonable assurance. So that was easy to pick. By the way, number 3, limited assurance, not for an audit. It will be for a review. So covered a little bit about those, not much in chapter 2. We'll cover a lot more about them if you take the graduate level auditing course. Excuse me. Well, then C. Which of the following statements describes why a properly designed and executed audit may not detect a material misstatement in financial statements, excuse me, resulting from fraud. Okay, so what might you say is a good answer for this one here? Yeah. Okay. Well, it's not. Audit procedures are effective for detecting unintentional misstatements may be ineffective for an intentional misstatement that is concealed through collusion. Very true, because that human intent to deceive makes it hard to detect. So we have to be a little bit more cunning as an auditor. Just kind of ruling out the others, which you have to in situations like this. An audit is designed to provide reasonable assurance of detecting material errors, but there is no similar responsibility concerning fraud. Not good. We are there to detect the material misstatements arising from fraud. And for that matter, arising from illegal acts too. You know, anything that shirks that responsibility that easily, it's not very believable. Well, then number 3. Factors considering and assessing control risk indicated an increased risk of intentional misstatements, but only a low level of unintentional misstatements. Really, that really does make sense. Even though I realize that we've not studied internal control too much, but it's just weird looking. There is no, low risk of unintentional misstatements. Sounds, I'm not quite sure how those two fit together. So if you encounter something where you're not quite sure how 2 different concepts there fit together, would you say that's the correct answer? No, I wouldn't think any further about it. A lot of candidates do. Don't waste the time. Rule it out. Then number 4, the auditor did not consider factors influencing on risk or account balances that have effects pervasive to the financial statements taken as a whole. So it sounds like big account balances. Well, if the auditor did not think about big account balances in some fashion regarding risk here, that auditor was not a very prudent, did not exercise due professional care. Because for big balances, you bet we really think about how we're going to audit them. This sounds like the auditors just kind of said, things will work out. Not good. So again, number 1, the best answer. And if you really had to guess, no other recourse, time's up, pick number 1. Why do I say that? Even if you just eyeball this thing and answer in 5 seconds. Why pick number 1? It's the longest. So if in doubt, go for the longest. If you don't think the longest one's going to be correct, then you will go for the shortest answer. Go for the exceptions. Well, then, number 22, dealing with management assertions. So, first of all, an auditor reviews aged accounts receivable to assess the likelihood of collection, to supervise management's assertion about the account balances of, okay, what did you say here? Number one, existence. Let's make sure those accounts really exist. They're really owed to customers. Customers really owe them to our client, pardon me. It's a way around. I was thinking about accounts payable. Almost, except they're owed to vendors and suppliers. Oops. Now, we want to make sure they're also not overstated because some are uncollectible. They have to be written off. We don't write them off, or specifically, management does not. Management has violated existence because they overstated the accounts receivable total balance. I'll tell you, you could probably justify number 3, valuation disclosure 2. Valuation and allocation, specifically valuation of net accounts receivable, because what the auditor's doing, we give a clue as to bad debts, therefore net accounts receivable if we subtract. And for that matter, number 4, rights and obligations, you're looking at the entity's rights to record assets. So you can really even justify that. I'll tell you, I wouldn't give you something like this on the exam with more than one potentially correct answer. If I did, I would give you credit if you picked number 1, pick number 3, or pick number 4. They're all potentially justifiable. So these assertions have some overlapping qualities. And let me see, actually, I'm sorry, in A, I should say the book's official answer is number 3, valuation and allocation. So I was approaching that from the standpoint of not looking at the correct answer of the book. So I actually told you a little bit more. So the book's one correct answer. That's what my accounting lab would have on it as far as the answer on it goes. But then if you email me and told me you saw this issue there, I would go back and give you credit for that. Not a problem. By the way, just because the book says that an answer is correct, or the answer key says some answer is correct, does that mean that it really and truly is? No, actually not. This is an example of that. But the only problem is kind of hard to question CPA exam results. Usually not very effective. They usually don't change. Excuse me. They don't like to admit to their errors. Well, then B. An auditor will most likely review an entity's periodic accounting for the numerical sequence of shipping documents. So let's make sure they're all there, recorded once and only once. That's a test we'll get into more in the second course. To ensure all documents are included to support management's assertion about classes of transactions of, okay, we're trying to make sure that all these documents are there. They've all been recorded. We did not skip one. We did not understate anything, including in this case, sales and the related accounts receivable, you can bet. So making sure that we do not skip any shipment that went out to the door to a customer. If there's a shipment that went out the door, we verify it was recorded in sales and therefore recorded in accounts receivable or cash, the client paid cash up front. So if we make sure that we did not skip recording anything, we're checking number 2, completeness. Making sure that everything is there, recorded once and only once. And lastly, in C, in the audit of accounts payable, an auditor's procedures will most likely focus primarily on management's assertion about account balances of, okay, accounts payable. Let's answer it this way. Accounts payable is which classification of accounts, which type? Asset liability, revenue expense. Liability. What would the client like to do about liabilities? Overstate them or understate them? Understate. So they'd like to violate completeness. Because if the client understates, in this case, by leaving an account payable off the books, they understated liabilities, they would love to. The owner would say, in this case, accounts payable are not complete. And the owner is going to probably speculate that some other liabilities may not be complete. This client, therefore, is trying to engage in fraud by understating liabilities, and that's the situation that's commonly happened. Lots and lots and lots of accounting frauds. Questions there on any multiple choice. Okay. Now, obviously, kind of running out of time here. In chapter 6, let's see what else I have. I look here in my book. Number 32, I'm not as concerned about that short case. And I think that my accounting lab will probably be sufficient on that. If you have any questions, just let me know. How many of you have done number 32? Okay. So why don't we handle that by exception? If you find a problem, an issue, I should say, with that, just let me know. I'll be glad to go over that with you. And I say that because having taught out this book for years in many previous versions, well, not quite 16 of them, but almost, even though we're up to 16th edition, that's why I said that. Well, I'll tell you. With that problem, it's an old one, and students have had very few issues with it. Very few. Now, in fact, I forget who it was. Someone used to teach with. Used to ask which edition of the book are we using? Left hand. Hang on. Let me plug back in and hope for the best for the battery fan. Okay, so let's do that on your own. Let's move along to chapter. Just did chapter 7. I said chapter 6 and I did chapter 7. Again, if you've taught something for a long time, everything runs together. So I said chapter 6 to start. I'll go ahead and do chapter 7. That's okay. We need to do it too. Wait. No. Yeah, I see. Pardon me. I did chapter 6 homework. So let's go to chapter 7. I'd already put my book over to it just a few minutes ago. Okay. So chapter 7. Starting on page 208. Yeah, and if I go for something in duplicate, I started to at times in class. I hope I notice it. How often do you think my students do? Actually, not very. I'm sorry to report. That makes me very concerned. If I skip something, conversely, my students may not realize it. I wish that they help me police internal control over class coverage, but sometimes they do. Sometimes they don't. But it's really easy to make errors in coverage like that when you've taught something for years. Professors do it all the time. Try and get everything in tonight with our shortened class, and especially easy to do so as you're trying to rush a bit. So chapter 7. Here on page 208, some review questions. Let's see if I had a thing there. Nope. Any questions on review questions? Right, good. So let's come down to number 31. I'm sorry, 21. Multiple choice questions from old CPA exams. Following questions concern persuasiveness of evidence. So we're going to talk about evidence quality here. And as in fact, evidence is one of the major things we talked about in chapter 7. So looking here at A, which of the following types of documentary, so we're looking for a document, a key word there, evidence, should the auditor consider to be the most reliable? Which one did you say? 2. Sales invoice issued by the client supported by a delivery receipt from an outside trucker. That delivery receipt from the outside trucker is unbiased. It shows the sale validly exists. So, customer got the goods. Nope. I'm sorry. Number 1 is quite reliable. I should have said, though, the official answer is number 2. Confirmation of an account payable balance mailed by and returned directly to the auditor. The reason the number 2 is even more reliable is because it's never been in the client's hands. It's always been external evidence, totally unbiased. The reason the number 1 is not quite as reliable, but it's pretty good, and I picked it before I read through all of these potential answers. Don't do that. Good way to get a multiple choice question wrong, and people do it all the time. But it's really reliable. The sales invoice issued by the client, scored by this delivery receipt from outside trucker. The reason it is because that outside delivery receipt is external evidence, and it's really good evidence. The yes, indeed, this is valid statement, and it went to the clients. So it's really the type of question where you have to rule everything out except the correct answer. Now, C, we could rule out a check issued by the company and bearing the payee's endorsement. They signed it or flipped it over and stamped it for deposit only, company name, account number. That's the endorsement they're talking about. That's included with bank statements mailed directly to the auditor, or the auditor accessed them directly online, which there are portals in audit software for such information coming from an outside source like a bank. So that is quite reliable. The reason it's not quite as good as number 2 is that it originated with the client, again, a biased party. Now, number 4 is clearly the worst answer. An audit schedule prepared by the client's controller, reviewed by the client's treasurer, that is strictly external evidence. It has never been externally verified by an unbiased external party. So, delete that one. Well, then in B. Audit evidence can come in different forms with different degrees of persuasiveness, and which the following is the least persuasive type of evidence. An aisle-bound CPA exam that some nervous candidates rushing for time went in there and actually kind of glossed over least and went for the most persuasive type of evidence. It's tempting, don't do it. So worst case, vendor's invoice. Oh, that's good. That's external. Bank statement obtained by the client. Okay, it's external. The client gave us a copy, forwarded a copy to us by email, perhaps. Fairly reliable. However, we can make this more reliable by now verifying with bank. Or if the client used audit software, hopefully the client can post read-only access information for us, like their bank statements. So that way we verify, yep, indeed, this is just what the bank says too. 3, computations made by the auditor, well, reliable. They were made by the auditor. That's why. The auditor's direct knowledge. Pre-numbered sales invoices. Actually, number 4 is the correct answer. Let's switch from number 2 and number 4. Here's why. At least number 2 did have some external verification by an independent external source. Looked really good until we got down number 4. Pre-numbered sales invoices. We realized that the client is just showing us receipts they prepared. Again, more information about that in the second course. But if we are looking strictly at client-generated documentation, it's not very reliable because the client could have fabricated that. But now if we go about gathering some more reliable evidence, such as confirming the related accounts receivable and everything checks out, great. Now we can place a lot more assurance about these pre-numbered sales invoices. But anyway, for now, we're going to pick number 4. That will be our correct answer. My accounting lab will agree with you. If it doesn't, we have a problem, and just email me. Yeah, sometimes software like this can be loaded with wrong answers. Actually can be. So, word of the box. We'll then see which of the following presumptions is correct about the reliability of audit evidence. So client read through. Information obtained indirectly from outside sources is the most reliable audit evidence. I would say no to that one as I go through these, because indirectly, I don't know how the indirect means is, that doesn't sound very good. Instead, directly would be the key. Like accounts receivable confirmations, mailed by the auditor and returned directly to the auditor by the client's customer. That would be a whole lot better. Now, in number 2, to be reliable, audit evidence should be convincingly rather than merely persuasive. I don't recall anything like that, do you? No. So if we didn't see anything familiar there, that's not very likely to be a correct answer. It's not. I'm not sure what they're talking about, but here's what they really did. They wrote this question just picking some unrelated term, which still sounded good to the uninformed. We are not uninformed. We will not fall for that. Good. All right. Well, then number 3. Check the official answer. Yeah. Okay. Number 3. Reliability of audit evidence refers to the amount of corroborative evidence obtained. They're talking here about sufficiency. That's actually a different concept. And reading into this further, just because we have more audit evidence doesn't mean better things for the auditor. You know, we could have more garbage in. It doesn't matter how much garbage in we have. What are we still going out of the system? Garbage out. Yeah. So feed the auditor more unreliable information. You'll get unreliable audit results out. Okay. So finally, number 4. Effective internal control provides more assurance about the reliability of audit evidence. It always does. Because now we have a good internal control system. It probably doesn't take as much garbage in. It probably helps detect that, especially if AI. Good things are coming. And if garbage does go in, okay, the system probably detects it. And well, hopefully the client corrects things. But in any event, better internal control means better evidence. The client's financials are probably okay. All right. We knocked that one out. Any questions there on multiple choice? Again, multiple choice being the number one test taking problem with students. And it's better oftentimes if I read through on my own, just ignoring the official answer, of course, on my accounting lab, and seeing what I come up with so that you can see my recent process. Again, sometimes there's a second answer that might just be, or should be officially correct. So whenever I identify one of those, you can let me know if my accounting lab says something different, and if you picked the alternative answer. If it's correct, I will give you credit. Like I said, I don't overly rely on what the book has told us in the way of the answer. Finish up here. Okay. Number 22 here. Oh, kind of behind here. Well, number 22, I'll tell you the answers are 1, 4, and 2. Plug those into my accounting lab and you'll get those right. 1, 4, 2. Number 23, plug these in. 3, 3, 4. 3, 3, 4. So the results were 1, 4, 2 and 3, 3, 4. Sounds like a lottery. Draw the correct answers or the correct ping pong balls, and you'll get everything right on my accounting lab. And then with chapter 7, discussion problems, I don't go down those. Students don't have any issues with them. They're fairly objective, and my accounting lab will give you sufficient feedback. If it doesn't, let me know. All right, that's what I've got for you tonight. Any questions? Okay, good. Right here at 8:45. Celine and Josie probably would have gone until 9, right? Okay. Well, I may have to sometime, but hopefully not. All right. So have a good night, and I will see you back 1 week from tonight. Bye-bye. Again, look for information about the exams. If you don't get an email from me within the next couple of days, let me know. Bye-bye. Take care. And anybody online, any questions?
Oh.
Oh, I'm sorry. Go ahead, please.
I was just saying, thank you, Professor. Good night.
Oh, good night. Thank you, Amanda. Take care. Bye-bye, everyone.